Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Well, guys, there are a million lessons we could learn from the meme stock era, both from GME and AMC, right? And not all those lessons were pleasant ones. But I think the best lesson lies within this headline from June, how Roaring Kitty's wealth went from 53,000 to nearly 300 million and could one day top 1 billion, which I think it did, albeit briefly. The lesson here to me is if he can do it, so can you. I'm not saying model your investing, trading, or lifestyle after Roaring Kitty. What I'm saying is you can start with a relatively small amount, put in the work, and create a significant amount of wealth for yourself and your family. Did you guys know the best performing investors are ones who are dead? That's correct. Fidelity, one of the biggest asset managers in the world, performed a study on their best performing client brokerage accounts. That's retail, that's us guys. Over a 10-year period, they found that the highest returns came from the ones where the account holder was dead. The second best were the ones that had forgotten they even had investments. Why is this the case? Most of the time, the market rewards investors who get into position and then do nothing. While it seems simple, it's a lot harder than it sounds. Successful investing can be extremely boring, and it can be hard not to watch the news and tinker with your investments to try and squeeze out every ounce of performance from your hard-earned capital. But the market rewards patience and punishes those who give in to emotions. Dead investors aren't usually reading the news and panic selling as investments go down, nor are they prone to panic buying as the market is soaring. Peter Lynch, who averaged a spectacular 29.2% annual return with the Magellan Fund, referred to this as cutting the flowers and watering the weeds. NBA legend Shaquille O'Neal quadrupled his net worth using this genius advice from Jeff Bezos, and it wasn't about high returns. Shaq said, "I heard Jeff Bezos say, if you invest in things that will change people's lives, you'll always get a great return on your investment." Following Bezos' philosophy has paid off handsomely, with O'Neal claiming he's quadrupled his net worth by prioritizing mission-driven opportunities. This is why Uncle Frank is investing in Archer Aviation, for example. I believe it'll change people's lives and the face of modern transportation, not investment advice or advisor. It may even save lives someday. Think about it. What if someone suffers a heart attack at the airport and are flown to the hospital in minutes instead of driving in an ambulance through rush hour traffic? Maybe the Archer Midnight will rescue some Navy SEALs one day. For myself, I don't invest in stocks anymore. I invest in the businesses behind them with strong ideas or products and some distinct opportunities in the future and with capable leadership. I invest in XRP because I believe it will change how money is transferred all over the world. Warren Buffett once famously said, "Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Buffett has long touted the benefits of being a long-term investor, but that's not what Uncle Frank is talking about here. This quote emphasizes the importance of focusing on the business you own rather than how its stock price moves around every day. You see the image on your left? That's Jeff Bezos at his desk he built out of a door back in the day. This is when Amazon was just going to be an online bookseller. Looking back, I'm sure you all would like to invest in Amazon at this stage. My point is sometimes you're investing in the business. Sometimes you're investing in the man. Sometimes it's both. Would any of you like to invest with Adam Aron anymore? I think you know my answer. Warren also said, if you don't find a way to make money while you sleep, you will work until you die. That's why Uncle Frank invests in the Gabelli Utility Trust, or GUT, even in my speculative accounts. I always want something in there that pays me every month, rain or shine, not investment advice or advisor. I also need somewhere to park my money while I'm searching for the next opportunity. I've gotten out of the habit of selling a winning trade and immediately buying something else just because I have liquidity in the account. I've also stopped revenge trading. That's where you keep adding to a losing position or sell a losing position and immediately jump into something else in an attempt to make your money back. The lesson here is to come up with your own list of trading rules. Write them down, post them on the wall, and follow them. If you don't have one, here's a good place to start. Top rules for successful trading. Rule 1, always use a trading plan. 2, treat trading like a business. 3, use technology to your advantage. Guys, set your alerts up. When I invest in a company, I sign up for alerts at the company's website. I follow them and their key executives on LinkedIn. Even if I'm working, at least I'll get notified from my brokerage account apps and news feeds. 4, protect your trading capital. Learn how to protect yourself to the downside. Learn how to hedge. 5, become a student of the markets. 6, risk only what you can afford to lose. 7, develop a methodology based on facts. 8, always use a mental stop loss. 9, always use an events calendar. And 10, always be reading, always be learning. Now let's review what happened Friday by examining one of my speculative accounts. You should know some accounts I have are for trading, while others I use to hold longer term. I'm sharing this account because it follows the philosophy we just discussed. The S&P, Dow, and Russell were down Friday while the NASDAQ closed in the green, so the indexes closed mixed. Oil is now over 70 at 71.09, and gold lost 43.50 or 1.61% to finish at 2665.90. Archer closed at 839, up $1.22 or 17.02%. So my January 350 calls have gains over 900%, and I may exercise some or all of those. I added a new position here in the ACHR common on a pullback in this account, and so far that's up 17.78%. RGTI, or Rigetti Computing, is a newer position, and it closed at 716, up 19.93%. I picked that one because I noticed the attention shifting from AI to quantum computing and wanted some exposure in the space. My trade is up 35%, but that stock is up 380% for the month. I took a small position in HOVR, or New Horizon Aircraft, recently. It's another eVTOL play with a plane that travels further and carries more passengers than Archer and Joby's planes do. It closed at 0.7150 Friday, up 0.0922 or 14.8%. My position is up 11.54%, and I'm learning more about the company now and will update you with my findings soon. I added a position in GUT, or the Gabelli Utility Trust, at 536 because at that price, the dividend yield is 11%. That one pays monthly instead of quarterly, and I can trade it because it's fairly predictable. Now, in this account, I added a hedge by going long volatility. The VIX closed down 11 cents at 13.81 on Friday, and my $14 calls expiring the 24th of this month closed down over 14%, but are still up from when I added them by 24.64%. I added this hedge because the indexes are at or near record highs. Both CPI and PPI were higher last week, and there are some distinct risks in the coming week, which I'll share with you on the next slide. Guys, this is a glaring example of why you need to use an events calendar for the markets and your individual picks. It's the week before Christmas, and it looks like a haunted house to me. Monday, December 16th, 9:45 a.m. Eastern Time, we'll see S&P Flash U.S. Services and Manufacturing PMI. Normally, I could care less about this, but it's the last big data before the two-day Fed meeting begins. So if something comes in crazy, it could affect their decision. Tuesday, December 17th, 8:30, U.S. retail sales, and the last Fed meeting of the year commences. Wednesday, the 18th, 2 p.m., we get the interest rate decision, and then at 2:30, the Fed chair's press conference. Now, guys, I'll give you my take on this. Inflation is not going down, and it's not going sideways. It's been going up. Everyone on the planet seems determined to cut rates at this meeting and then reduce the number of cuts for the year ahead. I think Trump himself is a bit inflationary. He has everyone very excited, me among them, and cutting rates here makes no sense. I like when rates go down. I love when the market rallies. I like lower credit card payments. I like when people buy homes and refinance their mortgages. But to cut here is reckless and might be inflating some bubbles out there. Just my 2 cents. Thursday, December 19th, 8:30, initial jobless claims and GDP. But Friday, December 20th, 8:30 a.m., personal income and spending, and then the entire PCE data group drops. Yes, the Fed's favorite, and it could come in hot again. Wall Street has this habit of explaining away bad news like higher inflationary numbers by saying it came in as expected or the rate of increase has cooled. Guys, that bullshit can only work so many times before you're forced to admit that inflation is in fact on the rise and not receding. But then also on Friday, you have the last quad witching date of the year, which is also typically the craziest witching date of the year. What makes this one particularly dangerous is we have a new administration coming in the White House, but also with both chambers on his side. Wall Street prefers gridlock in Washington so they can do less damage to the markets. This is an entirely different approach for the money managers out there, so there could be some crazy portfolio adjusting and rebalancing going on here, and it's just one day after a rate decision. Having said all that, now you can see why me and my trading partner on the VIX, Jordan, aka Optimal Projection, went long the VIX calls expiring the 24th, just past all these potentially explosive market events. Now, we're only 37 days to January 20th, the inauguration of a new president, and the exit of the most feckless, pitiful, and destructive SEC chair in the agency's history, Gary Gensler. All that makes me and Jordan nervous about what Washington and Wall Street may do to mark the occasion. So we're adding VIX calls that expire on the 22nd just beyond that potential shit show. I am hoping for the best here. I'm excited about the new administration. He's doing great and exciting things already. He pushed back on de-dollarization from BRICS. He's doing amazing things for crypto. He's promised to fast-track permits for big investments in the U.S. over $1 billion. It's great to be talking about these things instead of transgender toilets or sending Ukraine another $100 billion. But there could be some volatility here. So we're buying some insurance against it. It's a small investment compared to how high the VIX can jump if something sets off a bottle rocket up its ass. So we want to be ready for anything. Worries of a Fed policy mistake are growing amid a hot economy and sticky inflation. There's a growing fear among market commentators the Fed will make a policy mistake. The concern is that cutting rates too quickly could lead to a resurgence of inflation. Investors see a nearly 100% chance of a quarter-point cut next Wednesday. Investors see a rate cut at next week's Fed meeting as nearly a given, but fears are growing that the central bank might be about to make an error in loosening policy while inflation is creeping back up. Former Fed officials have suggested that the central bank should consider pausing its rate-cutting cycle this month despite the market's enthusiasm for continued policy easing. Richard Fisher, a former Dallas Fed president, said he saw no reason for the Fed to trim rates at the coming FOMC meeting, pointing to the fact that inflation is firmly above the Fed's 2% target. Prices grew 2.7% year over year in November, according to the latest Consumer Price Index report, up from the prior month's 2.6% growth. Now let's add this to the equation. This hasn't happened to U.S. stocks in more than 20 years. Here's why investors should be concerned. The number of stocks in the S&P 500 that are falling has surpassed the number that are rising for 9 straight sessions. The U.S. stock market is suffering from another bout of bad breath. Since the start of December, breath, typically measured by comparing the number of stocks that are climbing to the number that are falling, has deteriorated dramatically, even as the S&P 500 has continued to climb. That has led to something that investors haven't seen in more than 20 years. As of Thursday's close, more stocks in the index have fallen than risen for 9 straight sessions, according to Jonathan Krinsky, a technical strategist at BTIG. There has only been one other period in recent memory where the index's breadth has been this weak for this long, heading into and immediately after September 11th, 2001. Record inflows into U.S. stocks to drive Santa rally in last days of 2024, Goldman says. Guys, can you now see how just one unexpected announcement could set things off in either direction? From the article, Donald Trump's victory in the November elections, the prospect of interest rate cuts, and record inflows into U.S. stock markets have put the S&P index on course for a Santa rally in the final few trading sessions of 2025, a Goldman Sachs leading technical strategist has said. In the past 9 weeks, U.S. equity markets have logged a record $186 billion worth of inflows as capital has flooded into American stocks in the wake of Trump's electoral win on November 5th, a Goldman strategist, Scott Rubner, said in a note. Have you ever heard the saying, you are the sum of the 5 people you hang around with? Maybe you've heard it said, if you hang around with 4 millionaires, you'll be the 5th. Or if you hang around 4 clowns, well, hello there, bozo. My suggestion here is for 2025, have some solid trading partners. Expand your network. Test your trading ideas out on your trusted contacts. Let them shoot holes in your plan. Be careful who you follow out there, like the YesTard YouTube guys on AMC. Instead of YouTube personalities, let's follow some smart people on LinkedIn or Twitter. You'll be amazed when an industry titan on LinkedIn actually answers one of your questions and maybe even connects with you. Thanks to my network, I got to interview people like Rudy Giuliani, Patrick Byrne, and even Doug Sifu. Connect with the executives at the companies you invest in instead of listening to Tony De Niro, who is living proof you could read a disclosure and still have no clue what it actually means. It's a quiet week for earnings this coming week, but I will be watching Micron after the close on Wednesday and FedEx and Nike after the close on Thursday. We always check the chatter on this channel. Here's the top 20 on Reddit's sentiment and mention tracker over the past 24 hours. Bitcoin in first, followed by AMD and Nvidia. In fourth, XRP, ahead of Tesla. In 12th, Palantir, followed by GME and Archer Aviation in the 14th spot. Lots of eyeballs on us. Guys, there's so much chatter out there on quantum now. That's why I put a toe in the water with RGTI. I'm also building a quantum list in case we get a pullback in the markets or worse. Scientists are rethinking quantum chips. It may spark a supercomputer revolution. Imagine a computer that could crack encryption codes, revolutionize healthcare, and solve computational puzzles impossible for today's most powerful machines. This isn't science fiction. It's the promising frontier of quantum computing, and researchers at the University of Chicago are bringing us one step closer to making it a reality. One item on my crash list and a quick way to get exposure to the quantum field is the QTUM ETF, not investment advice or advisor. Defiance ETFs is thrilled to announce that QTUM, the Defiance Quantum Computing ETF, has reached a major milestone, surpassing 400 million in assets under management, a testament to the growing momentum behind quantum computing. QTUM, up 40% plus year to date as of December 11th, is the first ETF dedicated to quantum computing, giving investors exposure to the companies building the computational backbone of the AI age. Now, guys, this article is from Wednesday, December 11th. These tiny quantum stocks have been raging. I own one of them, RGTI, but they are very volatile, very risky, but might be fun to add to your watch list while you're researching them. I have all three on my crash list as well. A trio of quantum computing stocks has seen huge gains over the past few months, bolstered by a wave of hype from retail investors looking to cash in on what could be the next big thing in tech. The list includes shares of Rigetti Computing, RGTI, D-Wave Quantum, QBTS, and IonQ, IONQ, all small cap stocks closely associated with quantum computing have gained 843, 455, and 398% in the 3 months through Tuesday's close, FactSet data showed. The trading on my personal number one pick for 2025, Archer Aviation, was fierce this past week to say the least. We saw it travel from a low of 677 and up above 850 at one point. Really exciting week with a whole slew of headlines and hit pieces stirring the pot. ACHR finished at 839, up $1.22 or 17.02%. So let's review the headlines for Archer starting 5 days ago. Top 10 trending stocks on Wall Street Bets as of December 9th via Swaggy Stocks. You guys see why I follow that now? Okay, Archer Aviation, bullish future despite Stellantis turmoil. So they're pointing to the Stellantis CEO stepping down, which I was also concerned about. Don't chase the rally, says investor about Archer Aviation stock. All right, a little hit piece from Tip Ranks 3 days ago. If you'd have followed that moron's advice, you'd have missed this whole move. Okay, Archer announces strategic partnership with Anduril to develop hybrid eVTOL military aircraft, raises an additional $430 million. Archer Aviation's $430 million fundraise triggers stock dip, but retail shrugs it off. Yeah, of course they shrugged it off, because this is smart dilution. This isn't what Adam Aaron does, clobber your own stock price every time it picks its head up to help the shorts out of a difficult trade. So this is for Thomas James, Little Bigums, Tony D, Phil For Real, and even Boss. We're going to be so fucking rich, blunts. This is smart dilution. Build your company up. Shout out your good developments. Build your stock price. Attract big investors like Millennium and ARK. No one cares when you dilute when your stock price is up 154% in 90 days. You don't sell at or near all-time lows. You don't reverse split your stock when you're in no danger of being delisted. Cinemark never split their stock, but you guys all knew better. Give away millions of shares at a penny. Let's vote for shit we know can't possibly help us, and let's attack and belittle everyone that was fighting Adam and Citi for what they were planning to do, right? Kathy Wood's ARK Invest dumps another 15.3 million Tesla shares, pivots to this flying taxi startup. Canaccord maintains buy on Archer Aviation, raises price target to 11. Archer Aviation receives a buy from Benchmark. Archer Aviation price target raised to 15 from 11 at Deutsche Bank. Two monster stocks to hold for the next 20 years. Now, guys, remember, this is a pre-revenue stock. So if there's a serious sell-off in the market, we could plunge down right alongside the market, and I'll probably buy that dip. Not investment advice or advisor. But I wanted to show you how an entrepreneur CEO like Archer's dilutes as opposed to a fat, degenerate, private equity piece of shit like Adam Aron does. You see, here's Archer's Adam on Fox Business talking about working with defense contractor Anduril and a potential deal with the Department of Defense on top of the deal he already has with the United States Air Force. As far as I know, he's not investing in bankrupt gold mines to bail out lien holders who were all short sellers of AMC, all while sending nude images of himself engaged in a sex act to complete strangers on his phone, ultimately getting blackmailed. This Adam makes $1 million a year, not $25 million a year. He doesn't double his pay plan during the pandemic. Only a thief running an enrichment scheme would do something like that. And how about this tweet, guys? I've instructed my team to find a way for me to buy more ACHR shares. As the largest individual shareholder in Archer Aviation, I continue to believe our shares are undervalued relative to our progress and growth prospects. Is that what we had at AMC? Not Adam, his entire management team, or even one board member have ever purchased even one share of AMC in 6 years, but sold $1 billion worth to us. Now, my die-hard Archer fans will appreciate this slide. What happened to the 1 to 4 million shares available to lend out in short every day? At the time of this recording, I see no shares available, and the cost to borrow fee is now up to 6.43%. What's that all about? Now, on December 2nd, the news broke that Stellantis CEO Carlos Tavera quit abruptly over strategy disputes. But the automaker has already begun a formal search for a successor. But what if the new CEO doesn't like EV tolls? But never mind that shit. The good news is, on Friday the 13th, we learned Stellantis acquired another $5 million worth of Archer Aviation stock. The transaction, valued at approximately $4.99 million, was completed at a price of $6.65 per share on December 11th. That's after the CEO left. ACHR shares have since climbed to $8.40, marking a 119% surge over the past 6 months. According to Investing Pro analysis, the company maintains a strong liquidity position with a current ratio of 6.03, indicating robust short-term financial health. Following this acquisition, Stellantis holds a substantial position in Archer with 60,486,000 shares owned directly. This includes 7.5 million shares held by Stellantis Europe, a subsidiary of Stellantis, as noted in the filing. The strategic move underscores Stellantis' growing interest in the aviation sector, aligning with its broader diversification strategy. Investing Pro data reveals Archer Aviation holds more cash than debt on its balance sheet. On the financial front, Archer maintains a robust liquidity position with over $500 million in cash reserves. The company also has secured $430 million in additional equity capital with contributions from Stellantis, United Airlines, Wellington Management, and 2.0. On the AMC side, AMC Theaters is offering tickets for $9.19 to select holiday movie showings, including Dr. Seuss, How the Grinch Stole Christmas, Elf from 2003, and National Lampoon's Christmas Vacation throughout the month of December. Roth Capital raised their FY 2024 earnings per share estimates for AMC in a note issued to investors on Monday, December 9th. Macquarie reaffirmed an underperform rating and set a $4 target price on shares of AMC in a research note on Wednesday. A number of hedge funds and other institutional investors have recently added to their stakes in the stock. Schwab Investment Management increased its position in shares of AMC by 153.4% during the third quarter. Schwab Investment Management now owns 3.7 million shares of the company's stock, valued at $16.86 million, after purchasing an additional 2.24 million shares during the last quarter. AMC closed at $4.18, losing 13 cents or 3.02% on Friday. An AMC movie theater in Massachusetts is closed until further notice after a woman who spotted a rat filed a complaint. Upon inspection, the public health director said the department found evidence of rodents by way of urine, feces, and entryways believed to have been carved by the rodents. Sonic 3 receives 2 more AMC popcorn buckets featuring Shadow and Sonic. The likeness of the blue blur and his shadowy counterpart grace the latest AMC popcorn containers. Now let's cover Ripple's XRP and RLUSD, its stablecoin. The latest boost comes from Arkham Exchange, which announced on December 13th that it has officially listed XRP for both spot and perpetual trading pairs. The listing has not only drawn significant attention from market participants, but also underscored the growing institutional interest in XRP. As of today, CoinGlass data reveals a 13% surge in XRP futures open interest, highlighting heightened trader enthusiasm. The ongoing rally reflects broader market sentiment favoring Ripple's token, especially as it continues to demonstrate resilience amid legal and regulatory challenges. Vincent Van Code, a prominent crypto figure, recently emphasized the significance of the New York Department of Financial Services approving RLUSD, Ripple's stablecoin. The crypto community has been anticipating this approval for weeks and was the final step delaying the stablecoin's launch. In a post on X, Van Code described it as one of the biggest things that have happened in crypto, noting that RLUSD is the first token classified as a regulated financial instrument, or quote, bank grade. This sets it apart from other stablecoins like USDC and USDT. The NYDFS approval of RLUSD carries broader implications for the ecosystem supporting it. Van Code highlighted that this approval indirectly validates the XRP ledger and Ethereum blockchains, which host RLUSD as suitable platforms for financial-grade operations. Launching on the Ethereum network allows exchanges that don't support XRPL tokens to list RLUSD at launch, while the XRPL provides a cheaper and faster alternative to draw investors toward it. Ripple remains in the spotlight as of the January 15, 2025 deadline for the principal brief in its case against the U.S. SEC approaches. While the SEC's outgoing chair, Gary Gensler, may pose further challenges before his departure, market participants remain cautiously optimistic. On January 20th, Donald Trump will be inaugurated President of the United States. On January 21st, we will never have to deal with Gary Gensler or his arbitrary enforcement habits ever again. The month of January 2025 will also mark a new season for the crypto space, especially for XRP. We can expect a more favorable regulatory environment going forward. We can look forward to the final resolution of the SEC's appeal. We can look forward to 4 and possibly 5 XRP ETFs to go online if you count Grayscale. We can look forward to mass worldwide adoption of RippleNet by banks all over the globe. XRP may play a role in Twitter's new payment system. XRP will soon be free to capture percentages of Swift's $5 trillion per day cross-border transfer business. The bottom line is Ripple's XRP and RLUSD counterpart is about to become the most respected crypto assets on the planet because nothing else comes close. I predict XRP to make a new all-time high in the first quarter of 2025, topping $3.84. By the close of 2026, I expect XRP to regain its place as the second largest token in the world by market cap, passing Ethereum. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.